Hello and welcome to the Friday Wrap Up brought to you by David Gockstein. I'm your host, Landy, and today is April 17th, 2026, and we have had a few very significant things happen in Bitcoin as well as in commodities and traditional markets. So let's get right into Bitcoin here. I wanted to point out that Bitcoin has now mean reverted back to the basis band here, which is right at $78,000, which that is the current high of the weekly here. We are trading slightly below it at the moment. And of course, $78,000 is this close open structure right here. So 78,370 or so. You can see that Bitcoin on the high here came up to about 78,390 and did tag that area. And of course, that is the zone that I have been talking about for quite some time overhead since dropping the $78,000 to $80,000 area. This is a direct retest of an area of support, and it's an area that needs to be recovered by the bulls if we want to see price head on into the mid to lower $80,000 region, specifically around 82.5 to 83, up to around 86 initially by the weekly levels that I talked about. Well, for quite some time now, 86 to 89 up there being key. And it's good to see. Again, I wanted to point out here, we're out on a weekly because I wanted to point out, a few different things, but that this is mean reversion at the moment. We do have the possibility of meeting the conditions that I wanted to see set in last week's candle for the higher low being set. Even though most indicators last week did fire off that this higher low was set on a close, I wanted to see closes above the $72,000 region for the weekly. That maintains. The weekly's still open for this current weekly candle. But this would be, if we have any close above $72,000 for me, a fully closed higher low and equal low setup for Bitcoin off of the low side structure here, your typical W. And on any closes above $76,000, this high down here, we would have a trend break. So we would have a trend reversal setup to a trend break. And of course, that begets getting to the targets that we're seeing now, 78 to 80 being key amongst them. And then above there, mid to low 80s, and then 85, 86 being the next big area at the weekly structure over here, which is $86,000, right on this high, to the high at 89, 88.8 here, $89,000 with the swing above it, a $200 spread there or thereabouts, $230 spread. Between a higher low and a lower high. Big inflection point in that range overhead. And that, of course, would be an area that we would need to see recovered to go and test the next lower high of this downtrend up here, which is at $89,000. So let's go ahead and really quickly turn on the support and resistance zones of interest here for the local structures. And you can see that we got that. Of course, we talked about this. We got the test of the higher low swing on the monthly. Of course, it was a lower low on the weekly, but it was a higher low on the monthly here at that 74.4. That was essentially a retest of the 73.835 level. We've seen all the high side structure over here taken out and tested. We have seen now the low side structure over here. That was the retest of the highs over here. And now we're seeing this 78 to 80, which is essentially this close open to this big swing low, which is also around $78,000 off of the initial big dump off for spot here off of the 109,360 highs up here. And then, of course, we have $80,000 on the close open here for that lower low structure to lower high between 86 and 89. So this is an area that we talked about getting tested. It has now been tested, and we'll see if we get a further test. Now, looking at the daily, you can see that we have closed above $76,000. So we met all of the conditions in yesterday's candle in one shot, which is essentially above $76,000. If we hadn't already seen 78, then look for 78. Anywhere now on closes above 74 to 76, probably going to see this get tested again around $78,000, and then that opens up the potential for the entirety of this area. Now, to be very specific, this is 78,000 rather, 370 to 80,600 or so. Depending on your chart, please mark the weeklies based on the chart that you are looking at. If it's a perps or a futures chart, if you're going to be trading that. Otherwise, I would just use spot. But in this case, I just kind of have been calling it 78 to 80. It's technically 78,370 to around 80,500 or so. Now, if we do see Bitcoin trade above there, especially, immediate continuation on, continued closes above the $74,000 area here, this box. And you would want to see on any kind of a high structure put in here, you'd want to see this area hold up at support for the highest probability of continuing to test the highs. So that'd be 74 to 76, right? Anywhere below there, again, we're working at $2,000 chunks essentially. That would be, 70 to 72, right? That would look pretty good for Bitcoin to kind of keep in this area between, around the $70,000 to $78,000, or essentially play in the $70,000 and above zone. If we did see that dropped, of course, things start to fall apart on any closes. Specifically, you see the lower first is now there below around $68,000. It's around $68,000 to $69,000 here. Yes, it's a little bit different than that. It's 67,961 to 68.2 or something. 68.3. But essentially, you want to see closes for this structure maintained now on the strong side above that 74 to 76 level. Excuse me, been talking all week. And then anywhere below there, still okay down to 70 to 72. Otherwise, things start to look a little dicey. Trend starts to break down towards that 68 to 69K down here. If we saw any closes below there, or really even lower time frame closes, we're essentially headed back to the bottom side of this range, anywhere between 65 and 67 initially, but really it's that 65K area that you got to pay attention to, because that's now that's the weekly high or low, which is this daily test down here to $65,000. Of course, $65,000 was the first high from 2021 before putting in the 69K area. And those just so happen to be the areas that you'd want to pay attention to, even as it relates to daily and weekly structure, as we start looking at possible downside should we see, price starting to lose, the 74 to 76, 70 to 72 level. So looks good. Now, you might be wondering, like, hey, what was the catalyst and all of this other stuff? Well, there was actually a few different catalysts going on right now. I told you, please pay attention to oil, specifically United States oil, WTI in this case, and Dixie, right? We had last Friday, we had a setup for Dixie that we had talked about. And that was that it had already put in a trend reversal to trend break structure, right? So it put in a full-on trend change, not a full downtrend, but a trend change. And if we go to currencies and bonds here, and we take a look at Dixie, we have now hit some of our key levels to the downside, but we saw the lower high to lower low structure already in place coming into Friday, where we were right here. So this was Friday, April 10th. And I had noted that oil wasn't there yet, but we might want to entertain that oil could get there in terms of structure. We had seen a lower high. Or did we see a lower high, or did we see... well, let's go look. I forget, actually, now that I think about it. Been doing a lot of talking, a lot of looking at charts. Let's just make sure. Yeah. So we saw the lower high already start to get no, we saw the lower low trend break. This was the trend break. So we saw the swing down into 90 to 95 last week, right? And we hadn't yet seen a lower high, but we had a lower low and we needed to see a lower high. So we had the trend break, right? And we need to see a lower high. In that case, we had a lower high on Dixie, which is the reversal set up to a lower low, which is the trend break. In this case, we got the trend break, lower high. And I told you pay very close attention to oil around the 90 to 95 if we start to see 90 break down. Of course, earlier this week, I mentioned keep an eye on the lows here because Wednesday we had a low come in at 86, essentially to sweep this area. 84 to 86 was the area to pay attention to down here. And I said, really, it's 84 to 88 at the close open. We got a nice sweep into that zone. It's not marked that way on the chart, but I talked a bit about it earlier this week. And that if we lost 90 again, pay very close attention. And if we start to see 84 to 86 lost, then we're looking at, anywhere from, 70 to 80. And then it's all about this low. And we talked about this at 74 to 76 about there. And we did see a close below the 84 level, 83.99 here for WTI. We saw a swing right down to on the low here at 78.97. So essentially, we've gotten target hit. We've gotten the trend reversal to full, trend break, trend reversal to another low here. So I would expect if we see this bounce aggressively next week, well, obviously overhead, it would have to, regain the 84 to 86 area and then head up towards 88 to 90 on the bottom side here by the lower first. And then it's all about this resistance zone between 90 and 95. Again, that's kind of an inflection point for price. If we did see it recover, then hey, we're looking, likely back up to 98 to 102.5 again. But if we see things continue to the downside, it's all about the next low. And things really could get accelerated to the downside, even on closes below around the $82 level, because this is, a range that is starting to push the downside lower second standard deviation. So while it is volatile within the range, true expansion to this level down here, 74 to 76 or so, would occur on closes below around 80 to 82 now, really starting to push that area. If it falls apart, I've mentioned this before, I'm looking basically 68 to 72 down there by the main support side where we saw all this big consolidation and no closes specifically below the 57.30 level here. We saw no weekly closes. We saw dailies get below there, but no weekly closes. Of course, we were talking about this since last year. And for the entirety of, last year into this year, this area holding up as support was what was telling us that we needed to go long oil. In this case, we've been short oil since the macro overhead resistance, which I talked about well before the actual conflict kicked off, that 115 to 130. Talked about this not just here in these videos, but across various stages on X. I might try to stream and do, because it's almost like a space on TikTok for some of the TikTok folks. Having a lot of fun over there in the chat. They're very active in the chat, unlike X, which keeps breaking the chats during live streams, where it's like you can't, people on the computer can't see what people on the phone or see again, and it's just a mess. And some people don't even know how to get to the chat on X anymore if you're on mobile, because it used to be if you clicked what is now the chat button, it would take you to the post as a reply. And now you have to click to chat, and it's just what a giant mess it's been on X. Hopefully it will get sorted out soon there. But either way, oil dumping off. We talked about this. We talked about the possibility breaking below 90 and the areas that we wanted to see hit. We kind of got it all in one go. We even got a close below that, which, by the way, doesn't mean too much till we see how futures and then how futures opens and then how the actual Monday session opens. But you know, this looks, lower second can be a reversal area. But if we do start to see anywhere below 82.5, that swing's probably going to get, 76 to 78 is probably the name of the game. And then we have to watch lower third by 74 down there, which is kind of all the areas we've been talking about to the downside below the 90 and 95 inflection point level. And of course, Dixie falling off a cliff into main supports. Not really concerned with where Dixie is at the moment. It was more to kind of really drill into everybody's heads the importance of the petrodollar, essentially. One of the things that I did want to note here, and I said this on a few different stages this week, and then of course on the breakdown, or not the breakdown this week, it was Money and Politics on David's show this week. But you're going to see the spread maintain, right? So this is going to get into a little bit of news. You're going to see the spread maintain likely for a little bit here. Note that what is currently occurring in the conflict between the United States and Iran is still all conditional ceasefire stuff. And the ceasefire does have an X date, all right? While the nations negotiate, and the United States was blockading the Iranian oil, but allowing, friendly ships through, essentially coming from friendly ports in the Gulf. We saw increased traffic, right? We even saw a cruise liner go through the supposed mined area in terms of their transit. They kept their transponder on the entire time. Obviously, today. And what's interesting is that even if it were fully open and tensions resolved, until there is an all clear for the mines, insurance rates will remain elevated for that area because of the increased probability or risk side of things, because no one actually knows. We've seen ships actually transit through this supposed mined area, and there's been on and off talk about if there could be mines and if there isn't mines, and very fog of war stuff. Now, when it comes to the actual transiting of that particular strait, it's more about the insurance side of things. And I know that there's a lot of political garbage out there on all sides, but it really does come down to the insurance side of things, because there's just look at history. There's been conflict where Iran has, attacked ships and shipping in that area. There's been U.S. blockades of that area already before for Iran. So this is not necessarily new stuff. And why did ships continue through despite the risk? Well, it was because they were able to get insurance. And now the coverage, although you can get coverage now over there for transiting the strait, it still remains elevated, right? And because it remains elevated there, we've seen the supply chain readjust, right? So you have shipping that's coming to the ships that are coming to the United States, hitting those X dates on those contracts, coming to pick up the oil at ports in the United States. You have the Red Sea and other straits and stuff like that you see that countries are now sending, and other companies from countries are sending their ships through. And what you have to understand is that increases cost, and the increased cost is still going to affect Brent's price in this case. So now you get a lot of the number crunchers that are doing the math essentially of, okay, if we might even have to get ships out. So there's increased cost because they've been sitting there in ports there. And if they are able to get insurance and get them through, it's at a higher rate. So that keeps prices a little bit elevated. It also depends on when the oil was bought. And then, of course, now there's all of the other loaded fees for if there is a longer transit in place to go and pick up oil, especially when you're looking at Brent. There's a lot of other factors at play. I'm way oversimplifying this, but understand that a fractured market may still continue until there is an all clear there in the Strait of Hormuz. Verification that there is that the mines, or if there was any mines, or if there is no mines, or whatever, really doesn't matter. You need an all clear. You'll probably see insurance rates normalize from there. Now, then it's all about normalization of traffic, and there was a lot of reserves being drained around obviously China, other Asian countries, then of course Europe. So then there's that makeup. So that could start setting the floor for oil. So I would be very, very aware of that. The other thing that I wanted to point out here, of course, is not just, SPY hit our targets. So I mentioned above 700, look for 705, potentially even 710. Hey, guess what we got? We got 710. In fact, nearly 710, 712 up here. No, 710.14. 710.14 was the high. No, 712 was the high. I was right the first time. Why did I doubt myself? I was reading the numbers correctly. 710.14 is the close. Sorry. This is a nice move. So we even went a little bit above that 705, 710 area. And honestly, this is going to have to come down at some point. It's just a matter of how much of a bid is left in it. And now getting expansion, getting, downside expansion to upside expansion. I had mentioned that we got to watch for VIX, right? And we'll see daily bumps and stuff like that when we get the larger candles on expansion, but VIX heading back down to some pretty key areas, and I wanted to see it get lower. It's starting to get there. So, we'll see what the news is over the weekend into next week and how that might affect things, right? Because people are looking at the news and then reacting. But honestly, the chart is telling us that we're going to be headed down towards that compressive VIX, that low level of VIX, even though we're in a high volatility environment to the upside. And that's where, you typically are going to see most talk about, VIX headed down, markets are headed up. And then when we see VIX rise aggressively, the most aggressive rises in VIX is going to come off of a consolidation, like what we saw here, or very, very, very sharp moves, like what we saw in 25, right? So late 25, you'll see VIX pop. But these are the moves, right? These types of moves, like in Q1 to Q2, where you get a compression at the highs, you get massive moves down, you get a little bit of a relief rally, even a fake double bottom here that didn't necessarily complete because it didn't meet the criteria of closing above 570, and then it just skates to the bottom side. That's a Six Sigma event. An elevated VIX, we saw, late last year, and then this is a beautiful corrective move, and a nice elevated VIX again. Realistically, I want to see VIX come down a little bit more, which in this case could still kind of means that there is some juice here left to squeeze for SPY. I would take kind of 5 points at a time, because we're going to get an aggressive update on the upper second. I have the feeling that as long as we're closing above, in this case, to preserve this kind of a move, and continued, kind of 710 to 715 as the range here, potentially, 715 to 720. We need to see closes. I'm gonna call it above 690 in this case. Closes continuing to stick above 690. If that is lost, right, because that's all of this structure, it can come down for support 690 to 695, right? And that's where the upper first is going to open at around 690, or somewhere between 690 and 695 in my estimation here on Monday. We can see that when we got the close open for futures, and the close after, we're at a right, the close open brought this one up to around what would be 691. So in this case, 69.12. Nice. Yeah, we could absolutely see, especially anywhere closing above there, 715 on any continuation, pay very close attention to 715 to 720 corrections, 690 to 695, pay attention to anywhere below there. There is the potential for a gap fill. But 675 is going to be the inflection point on the way back down. 675, 680 or so. We've got NASDAQ hitting our more aggressive target to the upside by the upper second and outrunning a little bit, but I did talk about 26.6 to 26.8 as a potential last that we spoke. This could get continuation. So it closed at 26.672, and we're looking at the high of 26.720. 26.8 to 27, is it in play? Absolutely. This is a move in progress. We need to see kind of where things head from there. Obviously, this has multiple layers of support. So one of the big areas that you want to pay attention to, obviously, on any retest is the prior highs, right? So 26,000 at 26.2 is essentially what I'd be looking at, is this structure over here to this high side structure. And then it's really down to around 25,850 or so. You can get down to the closes here and just call it 25.8 if you'd like. That is fair game as an area of support should things try to head back down anytime soon. Specifically during the Monday session, because I'm going to talk to you after the Monday close. But this is going to be the big daily and weekly area here that I'd pay attention to. Anywhere below there, well, then we start looking right back towards, the 25 and a half level. Anywhere below there, we're looking, 25 to 24 and a half and potentially a gap fill. And gap fills, we're going to come below 675 for SPY, I believe, right? Yeah, that's going to be below 675 into the 670 area even. So you're looking at a violent correction, but still, it's in that case, these are very, very highly likely, considering they are absolute V recoveries to new all-time highs. We're looking at very highly likely seeing higher lows, right? So trying to continue. And we did get a run of the 49.5 level. In fact, we hit on down. We did see a little bit of rotation within Dow, but not much. Tech is running, so let tech run. Let tech cook. 49.7 on the high. Any kind of continuation is right back to the all-time highs around 50,500 or so. Anywhere above here, 49.5 to 50,000. Is what I'd be looking for, as long as we see this closing essentially above the upper first here, somewhere around 48.2 to 48.5. If that, does get dropped, we're looking 47,850 to 48, and then potentially down for a gap fill anywhere below there. So looks good, very extended. Doesn't mean that it can't get continuation. Just watch that upper first standard deviation away from the basis here. That's kind of where I'd be looking for immediate continuation. One of the big things for Dow is that you wouldn't want to see it essentially drop the weekly or 47.5 to that 47,250. So that 250 point range there, and just pay close attention to it. Yeah, I hope everybody had a wonderful week of trading. If you are trading these markets, I had a lot of fun trading. It's been fun being back in the saddle where I'm my normal setup going here, even though my mouse seems to be a little wonky since coming back, so I'm not really sure what happened. I'll just have to go get a new one. Or, I don't know, maybe this needs to be cleaned. No, this thing is spotless. But yeah, please like and share this out there. I'm thinking about doing some additional content. I might even test something out over the weekend for TikTok. I'm going to start prepping some of this stuff to get clipped, or maybe even have to, because the format might even change format and record a little separate thing here, or I might just go live. I might go live. I am allowed to go live on TikTok again. So maybe I'll go live and like do a panel or have a discussion and see how things go. I don't know. We'll see. I don't know if that'll be this weekend. But I do appreciate everybody there and on X and everywhere. You can catch me, of course, next week on Monday on David's show in the morning, 12 p.m. Eastern, 9 p.m. or 9 p.m. 12 p.m. Eastern, 9 a.m. Pacific Standard Time. You should, you might find me on on like both Bitcoin Spaces or All Things Crypto Spaces as well on X, and then we'll see. We'll see about just keep an eye on the timeline. We'll see if I end up doing something on TikTok. I will reshare it for those on X if you care to come join sometime next week or maybe even over the weekend. Well, but I do appreciate everybody for hanging with me and listening to me and liking and sharing this content out there. I do hope that this finds a little bit wider audience for those that are seeking out this type of information because, well, I think it's really good information and we've been doing very, very well with our targets. Let's put it that way. So for a very long time, for those of you that have been around and watching my stuff for a long time, we've been nailing it and having fun doing it. And it's not difficult during these types of videos. I basically explain my methodology every single video for you and how I look at charts. It's nothing overly complex. It's fairly straightforward. It's all about meeting the conditions for the trend, for trend reversal setups, and then of course support and resistance areas of interest with a little bit of special sauce in there, measuring volatility. So take care of yourselves. Have a great weekend. Have some fun. Touch some grass, touch some ass, and I will talk to you on Monday. With all that said, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, that's twice now. Landy out. Take care.